There is one record inside your Social Security file that can quietly change the check you expect in 2026. That record is your Social Security statement. It shows your reported earnings, your estimated retirement benefit, and the ages that can change your monthly amount. If you were born before 1966, this matters because you are either already in the claiming window, close to it, or already past full retirement age. As of July 6, 2026, Eastern Time, Social Security does not show a special new rule that gives everyone born before 1966 a new payment. But the regular 2026 rules can still affect your money in a serious way. So this warning is not about a hidden bonus. It is not about a new check for every senior. It is about 3 mistakes that can reduce, delay, or shrink the money you were counting on. In this video, you will learn what the Social Security statement reveals, which 2026 work earnings limit many people overlook, and why your exact birth year can change the decision you make before claiming. Welcome to Life Bulletin, where we explain important USA updates in clear and simple words. Life Bulletin is an independent information channel and is not part of any government agency. This video gives general information and is not personal tax or financial advice. Always check your own record with the official agency before making a final decision about your benefits. Here is the main reveal. The central document for this warning is your Social Security statement. Social Security says a personal My Social Security account gives secure access to your statement, lets you verify reported earnings, and helps estimate future benefits. That means this one record can show whether your work history looks right and how your estimated check may change at different claiming ages. This matters because Social Security retirement benefits are not one flat payment for everyone. Your amount is based on your lifetime earnings and the age when you choose to start. Social Security says you can apply for retirement benefits from age 62 through age 70, and the amount is higher the longer you wait, up to age 70. Now let us make the born before 1966 part clear. If you were born in 1964, you turn 62 in 2026. That is the first age when many people can start retirement benefits. If you were born in 1965, you turn 61 in 2026, so you are close but usually not at the retirement claiming age yet. If you were born from 1960 through 1963, you are already in the early retirement window, but your full retirement age is still 67. Social Security says people born in 1960 or later have a full retirement age of 67, and benefits started before full retirement age are reduced. If you were born in 1959, your full retirement age is 66 and 10 months. If you were born in 1958 or earlier, you may already be at or past full retirement age in 2026. Social Security also says people born on January 1st should use the previous year for full retirement age calculations, so do not guess from a viral title. Check your exact date. Think of your Social Security check like a monthly bank deposit built from 3 drawers. One drawer is your earnings record. One drawer is your claiming age. One drawer is your work income before full retirement age. If one drawer has the wrong information, your final deposit may not look the way you expected. The first mistake is claiming early without understanding the permanent reduction. Age 62 can feel like the finish line. Many people are tired, some have health problems, some lost a job, some need money now. But age 62 is not full retirement age for people born in 1960 or later. For that group, full retirement age is 67. If you start at 62, Social Security says your benefit is reduced because you are starting before full retirement age. For people whose full retirement age is 67, starting at 62 can reduce the worker's retirement benefit by about 30%. This does not mean claiming early is always wrong. It can be the right choice for some people. If you need income for rent, food, medicine, or family needs, the decision may be personal. The mistake is claiming early without comparing the numbers first. Your statement can help you compare those numbers. It can show estimates for different ages. You may see one amount at 62, another at full retirement age, and another if you wait longer. Those estimates can change if you keep working, but they give you an official starting point. The second mistake is working while receiving benefits before full retirement age and ignoring the 2026 earnings limit. This rule surprises many people. You can work and receive Social Security retirement benefits at the same time, but if you are younger than full retirement age, your earnings can cause Social Security to withhold part of your benefits. For 2026, If you are under full retirement age for the entire year, the earnings limit is $24,480. Social Security deducts $1 from benefits for every $2 you earn above that limit. In the year you reach full retirement age, the 2026 limit is $65,160, and Social Security deducts $1 for every $3 above that higher limit. They only count earnings before the month you reach full retirement age. This is not the same as income tax. It does not count every dollar you have. Social Security's retirement earnings test is mainly about wages from work and net earnings from self-employment. It is not about your bank balance by itself. Here is where the problem happens. A person starts Social Security at 62. Then they keep working. They think the check will arrive every month without change, but their work earnings go over the limit. Later, they get a smaller payment, a withheld payment, or a notice they did not expect. This does not always mean the money is gone forever. Social Security explains that after full retirement age, benefits may be recalculated to account for months when benefits were withheld because of earnings. But that does not remove the short-term problem. If you depend on each monthly deposit, a withheld check can hurt right away. The third mistake is not checking the earnings record that creates the check. This mistake is quiet. It does not sound dramatic, but it can matter for years. Your Social Security retirement benefit is built from your earnings history. Employers report wages. Self-employed workers report income through tax filings. If a year is missing, too low, or matched incorrectly, your estimated benefit could be wrong. Social Security says you should review your earnings record, and if needed, you may be able to request a correction online through your ME Social Security account. You can also contact Social Security by phone. The agency says it helps to have proof such as W-2 forms or pay stubs. Do not wait until the week before you file if you can avoid it. Old employers may be closed. Records may be hard to find. A name change, spelling difference, or missing self-employment record can take time to fix. The earlier you check, the better your chance of finding the problem before it affects your decision. Now, let us look at who should pay the closest attention. First, people born in 1964 should pay attention because many turn 62 in 2026. This is the first year many of them can think about claiming retirement benefits, but it is also the age where the reduction can be large compared with full retirement age. Second, people born in 1965 should pay attention because they are close to the decision window. Many will not be eligible for retirement benefits in 2026. But this is a good time to check the statement, fix earnings errors, and compare future claiming ages. Third, people born from 1960 through 1963 should pay attention because they are already in the early claiming years. For them, the choice between claiming now and waiting until 67 can change the monthly amount. Fourth, people born in 1959 or earlier should pay attention for a different reason. Some may be at or past full retirement age. If they are past full retirement age, work earnings generally do not reduce retirement benefits through the earnings test, but Medicare premiums, taxes, overpayment notices, and bank payment changes can still affect the money that actually reaches the account. Fifth, family members should pay attention. Many older adults do not use online accounts every day. A trusted spouse, adult child, or caregiver can help review a notice or read official information. But no one should post private details in comments or send Social Security numbers to strangers. Who is not affected in the same way? If you are not close to retirement age, this may only be planning information. If you receive SSI, SSDI, survivor benefits, or spousal benefits, some rules are different. Do not assume one retirement rule applies to every Social Security program. Retirement benefits, SSI, SSDI, survivor benefits, and spousal benefits are not all the same. Let us look at a simple example. Imagine a man named David. This is only an example. David was born in September 1964. In 2026, he turns 62. He is tired from work and wants to start Social Security as soon as he can. He also plans to keep a part-time job. David opens his Social Security statement. He sees one estimated amount at age 62 and a higher amount at age 67. He realizes that claiming at 62 would give him a smaller monthly benefit than waiting until full retirement age. Then he checks his expected work income for 2026. He sees that his part-time job could push him over the earnings limit for people under full retirement age. If David claims without checking, he may face two surprises. His monthly benefit may be reduced because he claimed early, and some benefits may be withheld because he kept working and earned over the limit. The correct answer is not the same for every David. He may still claim early because he needs income. He may wait. He may change work hours. He may call Social Security to understand how the earnings test applies. The important point is that he makes the decision with official numbers in front of him, not from a scary headline. There are also related details worth checking. One detail is Medicare. In 2026, the standard Medicare Part B premium is $202.90 per month, and the annual Part B deductible is $283. If your Part B premium is taken from your Social Security benefit, your gross benefit and your bank deposit are not the same number. Some higher income Medicare beneficiaries pay an extra amount called IRMAA. That stands for Income Related Monthly Adjustment Amount. If your income went down because of a life-changing event, Social Security says you can ask to lower the extra amount for Part B and Part D. Life-changing events can include marriage, divorce, death of a spouse, loss of income, or an employer settlement payment. Another detail is prescription drug costs. Medicare says that in 2026, out-of-pocket costs for covered Part D drugs are capped at $2,100. After you reach that limit, you do not pay out of pocket for covered Part D drugs for the rest of the calendar year. This depends on having Medicare drug coverage and on covered drugs, so check your own plan. A third detail is taxes. The IRS says that for tax years 2025 through 2028, people age 65 or older may be eligible for an additional $6,000 deduction, or $12,000 for a married couple if both spouses qualify. This is a tax deduction, not a new Social Security payment. It can help some people, but income and filing status matter. There is also a payment safety issue. Social Security announced that it is moving fully toward electronic payments, and it says paper checks are much more likely to be lost, stolen, altered, or returned than electronic payments. If you still receive a paper check, review official electronic options such as direct deposit or direct express. Here is what you can do. Step 1, check your Social Security statement. Look at your earnings history. Look at your estimated benefit at age 62, at full retirement age, and at later ages. If you receive benefits already, review your notices and make sure the information matches what you know. Step 2, find your exact full retirement age. Do not guess. Your full retirement age depends on your birth year. For people born in 1960 or later, it is 67. If your birthday is January 1st, use extra care because Social Security says that date is treated under the previous year for full retirement age. Step 3, compare your claiming age before filing. Ask yourself this simple question. Am I choosing a smaller monthly check because I truly need it or because I did not know waiting could change the amount? There is no shame in claiming early when you need income. The danger is claiming early by accident. Step 4, estimate your 2026 work earnings before you depend on the full check. If you are under full retirement age all year, remember the $24,480 limit. If you reach full retirement age in 2026, remember the $65,160 limit before your full retirement age month. Keep records of wages, bonuses, commissions, vacation pay, and net self-employment income. Step 5, correct earnings errors early. If a year is missing or too low, gather proof. W-2 forms, pay stubs, tax returns, or employer records may help. Social Security says you may be able to request a correction online, or you can contact the agency by phone. Do not send original private documents to strangers. Use the official agency process. Step 6, read every official notice before you throw it away. Look for COLA notices, Medicare premium notices, direct deposit notices, earnings letters, and overpayment notices. If Social Security says you were overpaid and you disagree, the agency says you can appeal. If you agree there was an overpayment but cannot afford repayment, you may be able to request a waiver or a lower recovery rate. You may be thinking, I do not use computers. That is okay. Social Security has phone and local office options. You may need patience, but you do not have to understand every online tool alone. You may be thinking, I do not have old W-2 forms. Start with what you have: tax returns, pay stubs, employer letters, union records, or other wage documents may help. Ask Social Security what evidence may be accepted for your situation. You may be thinking, I already applied. If you recently claimed and changed your mind, Social Security says you may be able to withdraw your application up to 12 months after approval, but only once. If payments already started, you generally must repay money received, including amounts withheld for Medicare premiums, taxes, or garnishments. This is not right for everyone, so check carefully before taking action. You may be thinking, English is not my first language. Ask for language help when available. Do not sign a form you do not understand. Do not let someone rush you by saying your benefit will disappear today. Before you take any step, listen to this safety warning. Scammers use Social Security fear. They may call, text, email, or send a letter. They may say your number is suspended. They may say your benefits will stop. They may promise to increase your check. They may use fake badges, fake names, or a real-looking phone number. Social Security and its Inspector General warn that scammers may demand gift cards, cryptocurrency, wire transfers, cash, gold bars, or personal information. Do not put your Social Security number, bank information, full date of birth, home address, or account password in YouTube comments. Do not send private papers to anyone who contacts you first. If a message makes you panic, pause, hang up, ignore the message, then verify through the official agency. Now, what remains unclear? There is no confirmed special 2026 Social Security rule that applies only because someone was born before 1966. The phrase is useful only as a warning label for people near important retirement ages. Your real check depends on your earnings history, claiming age, work income, Medicare deductions, taxes, benefit type, and any overpayment or withholding issue. Also, future COLA numbers are not known until the official announcement. The confirmed 2026 COLA is 2.8%, but that does not mean every person gets the same dollar increase. Your actual amount depends on your own benefit and deductions. So bring this back to the main point. If you were born before 1966, do not treat the title as a secret government category. Treat it as a reminder to check your Social Security statement before a mistake becomes expensive. Today, take one useful step. Review your official statement. Confirm your earnings record. Compare your claiming ages. Check the 2026 earnings limit if you plan to work before full retirement age. Look at Medicare deductions if you already receive benefits. And if you receive a notice you do not understand, do not ignore it. The confirmed facts are clear. Full retirement age is 67 for people born in 1960 or later. Early claiming can reduce your monthly retirement benefit. Work earnings before full retirement age can cause benefits to be withheld above the 2026 limit. Your earnings record can affect the benefit calculation. Medicare premiums can reduce the deposit you see in your bank account. And scammers are using benefit fear to steal money and private information. Share this video with someone born before 1966 or with a family member helping a parent or grandparent. Subscribe to Use a Life Bulletin, turn on notifications, and come back for clear updates on Social Security, Medicare, IRS, retirement money, and USA benefit changes.